Hey guys, welcome back to another video. A lot of chaos in the market recently, so let's get right into it. So first off, let's check out the portfolio, which is surprisingly up today after, we're down almost 8%, at 12 a.m. So that was before market open, but down almost 8% to being up at the end of the day is pretty crazy swing. And we can see this past week down 12%, past month down 14%, past 3 months down 20%. So this is definitely a very big drop in the portfolio. Market has been on a downtrend recently, and we can see that SPY reflects this. So SPY is actually up on the day too, surprisingly. If we look at this, the past week, SPY is down almost 8%. Past month, 10%, and past 3 months, 14%. So SPY, my portfolio is a little bit farther down than the S&P, but it's also been up a lot more. So I think that I'm fine with that. I'm fine with the S&P, being where it is right now, my portfolio being where it is right now in comparison to that. Definitely trying to buy a lot more shares of a lot of these companies. I mean, AMD for $84 is just not. I mean, it's criminal. My average cost is 110. And I think the company is worth way more than that. So the fact that AMD is that cheap just doesn't make any sense to me. I mean, obviously it does. The tariffs, the fear that's being instilled in the market. But I've seen a lot of theories going around of what's actually going on with the tariffs and what's going on with the market. And I just want to address that and give my opinion on it. So I've heard a lot of things that Trump is trying to give back to the, give back to the poor, make stock prices cheaper. I don't think that's true. I mean, maybe it is, but I doubt it. I think what he's trying to do is, silently get the inflation rate to go down. I think that's one of his big goals, which it has been doing. And that's great for stocks like Realty Income, the stock I've covered previously on this channel. But we can see it's down today as other stocks kind of recovered a little bit. And this one, not nearly down as much as the other stocks. Past 3 months, it's pretty much break even. And with that dividend, you're coming out ahead. But yeah, I mean, O is definitely, a stock that I think everyone should own in their retirement portfolio, specifically their Roth IRA. But I think that you can own it in your regular portfolio as well. But definitely have some shares of that in the Roth IRA. So that one's great for that. And we can see Amazon actually up 4%, including overnight today. Because, I mean, it's crazy. It was down 7%. It was $159 before market open. So you can see that, I mean, that would make it down 15% in 1 week. And down, down 12% in the past month. And past 3 months have not been good for Amazon. Down 25% right there at that low. And I mean, down, if it was 159 right now, where it was a while ago, Amazon would be down 30%. And that's rough. Amazon is a great company. I think that these companies are way too cheap to ignore right now. Amazon, with what they do and where they're going, and I mean, you can even just look at a graph of their revenue. Like I think I showed a couple videos ago. A lot of people that are invested in Amazon. I mean, everyone uses Amazon. You watching this right now, you've probably bought something off of Amazon before, but that's not even the biggest part of their business. Yes, that is a great part of their business, but I don't know. I think that Amazon is just such a given easy buy. Look at how many times they beat in earnings. They don't have a revenue, or they don't have their financials on here, but I mean, this shows right here the earnings they've beaten every single time. I mean, in the past, what is it, 8 quarters? I think they're going to beat next quarter too, if I had to make an educated guess. And another stock that I really want to start building a position in right here is Meta. This one is, oh my gosh, 500. It was in the 400s, $469. If I could have gotten Meta for 469, gosh, I should have bought some, right there. I mean, it's crazy because look at where it was right here. It's down 7%, and now, it's up on the day. Almost, I mean, a little bit more than 4%. So, I mean, these stocks definitely rebounded a little bit today. I mean, they're just way too oversold for the news, because the president actually did say, I mean, oh my gosh, Meta's at a 21p right now. Guys, Meta's market cap is 1.3 trillion too. I think their market cap has been in the 2 trillions of dollars. So this is definitely taking a hit on these big companies. But I mean, companies like this, I mean, this is why I wanted to make this video, because the last one I made was kind of talking about the same thing, but stocks have fallen even more. When I made that last video, stocks they fell a great amount. I mean, I was down a lot, but I mean, now they've fallen even more, and it looks like they're beginning to rebound a little bit. I'm not sure if they'll continue dropping or consolidate right now. But there's a lot of companies that I got in for at a very cheap price that are even cheaper or around the same price I got in for. I mean, Shopify right here, actually, it's up 38%. Oh my gosh, this morning when it was down 10%, I was almost at, break even on Shopify, my investment there. I mean, not really, but I mean, you can see I was only up like 10%. And I've been up, I mean, on this position for the longest time I can remember. I was up around 100% or even more, just when it was in the the $100 range right here, and now they're at $81, so they're $20 cheaper than what they were. I don't know. I mean, these companies are ones that are very attractive right now. SoFi, I'm only up 20%. I've been up 100% plus on this position for I wouldn't even check it, and I was up 100% plus. It was in this range because I have it for $8. So when it was trading in those ranges, I was up a lot on it, and now it's all the way back at $10. That's almost my average cost. I think SoFi is a no-brain buyer here. No-brainer to buy that one. I mean, Celsius has actually held up pretty well because people don't stop drinking energy drinks in recessions. It's kind of like Philip Morris and Altria. Those stocks, I mean, people don't give up their addictions in recession. I mean, yeah, they dropped a little bit, but if you look past 3 months, the stock's up 25%. Year to date, it's up 25%. While the S&P, so this one's up 25% year to date. The S&P is down 13, so that's 40% difference right there that you'd make from investing in a company that fuels people's addictions. So yeah, I mean, it's the same thing with Celsius almost. People aren't going to stop buying them. It's, it is what it is. I'm investing solely based on what I think the company's going to do financially. We can see Nike right here was almost, I thought Nike was going to hit the 40s. I did think that. I mean, did they touch the 40s? I don't think so. Yeah, 52-week low, $52.50. I mean, Nike's a no-brainer buy. This is easiest. I think this is the easiest money in the market to be made. There's no reason Nike stock should be $56 right now. It's down 30% in the last 5 years. Past year, it's down 36%. You can see all the time. This stock's like, it's at what 2018 levels, or not even. It's at it's in the 50s right here. 2017, 2016, 2015 levels. Gosh, I mean, almost 2014 levels right here. So I mean, it's been over 10 years, and Nike trading for the same price it was 10 years ago. That I think they've grown their company in the past 10 years to the point where maybe they're worth a little bit more than they were 10 years ago. So that's definitely one to watch out for. Maybe buy. Cake dropping, a good amount. This stock was also in the $50 range. It was even more than that. It was reaching almost the 60s for a little bit here. Didn't quite touch the 60s, but it was very high. And I mean, you can see this price has dropped a lot. But this is a company that I'm very into. I definitely want a bigger position in Cake. Definitely what I'm going to be adding to. But I'd put my order for which stocks I want to buy more of, as fast as possible. And I mean, look at ELF too. I mean, gosh, this stock cannot catch a break. Yeah. Still a great company. Past 5 years up a lot, but yeah, I mean, look, this company's a fourth. It's less than a fourth of the price it was at all-time highs. So, that sucks. But ELF is definitely a good one. But I mean, in order of companies I'd put money, like in order of companies I think that are gonna rise, soon. Nike for sure. AMD definitely. I'd say Nike, then AMD. Just give me my top 5. I'd say Nike, AMD, Amazon, definitely. I mean, it's hard to pick one between. I'd say ELF and SoFi are kind of ranked evenly, and then I'd kind of put Cake in there. I think Celsius is a great company, but they've already, gone up a little bit from where they were. I'm up 30% on this one. Great. I'm happy to be up 30%, but I'm not going to, I might add a little bit to the position here and there, but this company's, they're up 22% in the past 3 months. So that's a position that's keeping me afloat right here, honestly. So yeah, I mean, I'm gonna invest some more money very soon here, probably a couple $100, over the next couple days, maybe 500, anywhere between 500 to 1,000. I mean, I like to invest around $1,000 a month. That's the goal that I'm trying to reach. I think that that's very doable, very good for the position I'm in. even more, hopefully. I mean, sometimes I, invest $3,000 a month. It just depends. I'm trying to reach 100,000. That's my goal. In the next 2-3 years, that would be very great. But yeah, I mean, with stocks so cheap right now, I mean, I'm sure you guys, I've actually, I mean, if you guys use TikTok, I've been seeing on TikTok recently that, I've never seen them before, but there's investing videos. Like, people are, I mean, that's getting pushed to the broader audience I've seen. Because I've never seen this before on my TikTok, but I mean, I'm not on TikTok a lot, but there's a lot of videos on investing and people saying, oh, you should buy in the stock market right now because it's so cheap. So I think that's when the stock market truly is cheap. And I don't think it's going to stay this way for very long because of where the economy is, and I don't think, I think the president that's in the position of power right now doesn't want the stock market to drop on his watch, and I think this is all calculated, and he has something bigger in mind. I don't think it's going to stay like this for a long time. I think come summer we might be at new all-time highs for a lot of companies here, so I would not be surprised if a lot of these companies are seeing new all-time highs come summer, maybe a little bit after summer. But yeah, I mean, I don't think it's going to stay like this for long. So I definitely take advantage of it now when you can. And yeah, I mean, even just buy the S&P. If you don't want to buy single stocks, I think the S&P. I mean, SPY is a cheaper one, but I mean, yeah, just year to date down 14%, down even a percentage point in the past year. But look at how, I mean, big this drop is. There's no drop that was really like this, and I mean, maybe this one, but this one was even longer and calculated. This one is just a really fast, just big $600 all the way $100 down, just really fast. And it all kind of happened, in this past 3 months. So I mean, you could see it's down 15% in the past 3 months, and it was at pretty much $600. Excuse me. So I mean, yeah, I mean, you can do what you want with that, but S&P is a great ETF. Another ETF I really like is SCHG. I'm not sure if you guys know about this one, but this one also very cheap right here. We can see down 20% 3 months, down 18% year to date. But this is an ETF that holds, some of it's mainly technology. I will say that, but I mean, they do have just the fastest growing companies. It's not meant to be only technology, but that's just how it worked out. They just have companies that are growing really fast, which I like. I think that's a very good idea. Their expense ratio isn't all that high. I think it's a little bit higher than something like SPY or something like VU, but at the same time, I think they deserve the higher expense ratio. They've returned. I mean, let me show you guys. Actually, this is very impressive what this ETF has done, and I mean, they've done it at a very high level since December 11th, 2009. I mean, this is including this right now. They've returned on average 15.5% a year. So if we go over to VU and SPY, they're not returning 15% a year. VU 14% since 2010. I mean, it has been a good market since then, but I mean, look at SPY, and then I 15%. That 1.5% adds up, and then SPY's 10, around 10. But yeah, I mean, these are, this is just a quick little video for you guys. I just wanted to show you guys that the market is insanely cheap right now, and there's some companies that are very undervalued, very great companies that you can get for, prices that you shouldn't be able to get them for. And I don't think it's going to last for long. So if you don't have a lot of money right now, try to get some quick. That's what I'm doing right now, trying to get some money really quick to put more on the market. Even if it's just, $50 and you have a $10,000 portfolio. One day, if you buy a Nike, if you buy a Nike shirt, you have $57 laying around, you buy a Nike shirt. Nike could be, a $300 company in the next, I don't know, 5-10 years. 10x your money just from putting it in there. So, or not 10x, you 6x, but still, I mean, it's great. It could be 500. I don't know. Nobody knows. But yeah, I think that right now, no matter how much money you can put in there, just put a little bit in. Just put a little bit in. I think you'll regret not putting money in the market right now. And if it continues to drop, please let it. I'd love to buy more shares for cheaper. But it looks like it's rebounding pretty heavily, so pretty fast as well. So yeah. So I appreciate you guys for watching this. Be sure to like the video if you enjoy this content, and also subscribe to the channel. We're 1 subscriber off of 80 subscribers right now. As of recording this, we're on the road to 100, almost there. I appreciate you guys for all the support. I love the support. Thank you guys so much. I'll catch you guys in the next video. Thank you for watching. Peace.